Hi guys, welcome to CA Inter Financial Management MCQs. I'm CA Anuj Jalota. We are on a mission to be doing every possible MCQ from financial management for costing, CA Inter, and for SCPM. Every MCQ possible has already been put. For CA Final, SCPM, we have already put every question from the modules. Now we all have started with Board of Studies portal also. Same thing, same strategy we are going to be adopting for your CA Inter, costing and FM also. Once all the module questions are done, we'll be starting with the things from the Board of Studies portal. Let's do the question. Now just before we start, in case you are interested, then one good news. CA Inter costing lectures of my previous batch are coming on YouTube every Saturday, Sunday. Complete lectures, soft copy, tests, ranking of every question, the summaries and everything. That'll be the only thing that you will need ever to be getting 90 plus also. Soft copy also is completely downloadable and you all can print it. It's a colored book. Okay. Let's start it off. From the following information, calculate combined leverage. Okay. Sales is 20 lakhs, variable cost is 40%. Okay. So variable cost is 40%, means 40% of 20 lakhs. So therefore, that'll be 8 lakhs. Fixed cost is 10 lakhs. Fixed cost will mean operating fixed costs, your rentals, your salaries, etc. Borrowings, 10% at 8% per annum. So interest should be coming to 80,000. Okay. Keep these numbers in mind, please. Okay. Further, we have to compute combined leverage. So 10 times, okay, 6 times, 1.667. The last one in this case is 0.1 times. Okay, now let's see. First of all, combined leverage is actually what? Combined leverage is something like this. Combined leverage measures the overall risk. In case you all have already got the answer, please comment below. Now, if you all have not, then continue to watch it. Listen, combined leverage tries to measure the overall risk of a business. Okay. It tries to be thinking that every company does have some risk. Why? Because of presence of fixed cost. Because of presence of fixed cost. Fixed costs are of two types. You all have operating fixed costs, your salaries, rentals. You all have financial fixed cost. Financial fixed costs are interest and preference dividend. Operating fixed costs give rise to operating risk. And the leverage calculated based on that is called as operating leverage. Whereas your financial fixed cost like interest and preference dividend gives rise to something called as financial risk, which is calculated in form of financial leverage. And measuring the impact of both these things will be giving you combined leverage. So combined leverage measures overall risk of a business. Now, overall, its formula is combined leverage, or any leverage to be honest, is percentage change in dependent variable upon percentage change in independent variable. In reference to operating fixed cost and financial fixed cost, sales is an independent variable, EPS is a dependent variable. Now, this formula can be taking many forms. One of the other forms that is there, CL is equal to operating leverage into financial leverage. And this can be reconverted into contribution upon EBT. Please do remember this formula will only be working if there is no preference dividend. Okay, if there is preference dividend, then there is slightly an elongation version of this formula, and that is contribution divided by EBIT minus preference dividend upon 1 minus tax. Okay, so now let's try to be using this last thing that I had kept it on the screen. So therefore, combined leverage is equal to contribution upon EBT. Let's compute both of them. So sales is there with you. That's 10 lakhs. Variable cost is 8 lakhs. Calculate contribution subtracted. That will give you 12 lakhs. From there, subtract operating fixed cost. That was 10 lakhs. That will give you EBIT. That will be nothing but 2 lakhs. From there, subtract interest. We calculated that thing as 80,000. And lastly, that will give you EBT. EBT will be 1,20,000. So let's start to be computing combined leverage. Combined leverage, one of the formulas is it is contribution upon EBT. Contribution is 12 lakhs. EBT is 1,20,000. Let's divide them. That'll give you 10 times. So out of the 4 options, answer should be A. That should be the correct answer. That is the correct answer. That's it for this entire MCQ. One small thing, this is a QR code that will take you to a playlist that has every possible MCQ of financial management that you all have put so far. Ensure to check it out and share it with your friends. Let's meet up next time. Till then, take care. Bye.